with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how to make money every day off of the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at the handle Bullish Chips to stay up to date with our real time tweets of our entries and exits on not only scalps and day trades, but our mid and long term swing trades as well. Make sure you hit the subscribe button on YouTube and make sure you hit the notification button as well. That way you're notified of when we drop our videos. We do release videos every day during the week and once on the weekend. So make sure you've subscribed and hit the notification bell so you get alerted to when we do release our videos. If you like today's video, make sure you hit the like button at the end and leave a comment if you want, or if you have a different opinion, leave that in the comments as well. I'm always open to different ideas because sometimes it can help me see something in the market that maybe I wasn't seeing. Just a reminder, we are not financial advisors. We do not offer financial advice, but what we do offer is our view at the price action for SOXL, not only in the current day, but in past days and where we think price action will take us in the future. So without further delay, let's get into the charts and let's review what happened today, talk a little bit about our trades, and then set up the charts and our notes for tomorrow. That way we can make sure we have a profitable day tomorrow as well. So today, you can see on the day chart, which we've had pulled up here, it did form somewhat of an inverted hammer with a decent wick to the bottom side of the candle. We did finish red, so definitely not a bullish signal, but considering the range that we're in, the overall trend that we're in from a longer time frame perspective, not exactly the most bearish signal either. We could, go down tomorrow, but considering this range that we've been in for about 3 or 4 weeks now, we have a pretty good idea as to where we need to enter calls and exit calls and enter puts and exit puts. So you can see, excuse me, 2 days ago we were at the bottom of the range. Today we were back at the top. A few days last week we were at the top of the range, some at the bottom, and so on. So we have a pretty defined range here. We've been talking for weeks and weeks now, even before we approached this resistance area. But we've been talking about this monthly downtrend line that we've got going here. We've also talked about the year flip, which is 2813. This would flip the year back green. If you look to the upper left-hand part of the screen, we have our time frame continuity indicators, and of course today was red, but the week is green, the month is green, the quarter is green as well. If we can get that year flipped green, it's a pretty bullish signal. Gives us more confidence in playing calls for longer periods of time, and like we've been talking about, it although it will flip us bullish, it does act as a point of resistance. When you approach it from the bottom, it would be support if we were approaching it from the top. So we were expecting a fight over this level. I don't think we were expecting a fight as long as we've had. Like I said, about 3 weeks for we've been ranging between 28 and 24. We did have a gap from last Friday or Monday, I believe, was it? So this is Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday. Yeah, Monday to Tuesday gap down that we did have out there. Today we gapped up, basically to the top of that gap, creating, at least what I call a double gap. So let's zoom in a little bit further and we can take a look. If you are new to the channel, make sure you check the description for our videos about how we set up our charts. It'll give you more details about the different colors for the lines that we use, what they signify. Those signify different time frames, month, quarter, year, depending on the color. We don't have a whole lot of indicators that we use. We like to stick to the strat and broadening formations, throw a Fibonacci in there from time to time for major moves, and we kind of really run with that. The strat is the real base of our trading method. So if you want more information about the strat, go ahead and check out the description of this video as well. There's a link to Rob Smith's YouTube page, Smith's in the Black. Rest in peace, Rob, but he's no longer with us. But he's the creator of the strat. There's plenty of information about him on the internet, so make sure you go and do your research. Don't just take my word for it. Again, I'm not a financial advisor, but I'm just sharing with you what has worked for me over the years to provide consistent income. So again, if you're new with us, you would not be familiar with the fact that we had swung call overnight. We had it was a runner basically from a set of calls that we had bought yesterday. So we did get the gap up and the initial move up. We did sell a little early just because if we bring in our scalp chart, we were getting to the top of the week's expected move. I thought there was something else there. Oh, it probably was a broadening that's now moved, like an hourly broadening or 15-minute broadening. But as we reached up here, just before we turned back down, up in this wick area, if we look at the 1 minute, I don't even think there wasn't even a trigger to why we sold it. It was just the amount of profit that we were in and the indicators we were running up against. Okay, I think it was just more on this 1 minute. You see this weekly broadening formation comes in here, this purple line. That's a weekly broadening formation. Once we butted up against that and had the inverted 2 hammer, we sold. And again, follow us on X. We do tweet our live entries and exits. So we did tweet out at this time that we sold and why we sold. We did mention that we were towards the top of the week's expected move, this purple box that we're in. If I zoom back out to the day and go to our swing chart, so you can see this is a little more lines than I'd like to have on here, but you can see this purple box. This is the expected move for the week. So we were reaching the top of the week's expected move. Internals was also playing a part as well. I refer to internals a lot of times. I'm referring to the internals for QQQ. If we go ahead and just take a look at those. Yep, so here is the SOXL 5-minute chart. Here is the tick, tick Q to be specific, ADQD, which is breadth. Tick is just exactly what it sounds like, how many stocks are ticking up versus ticking down, and the vol QD, which is the volume inflows. So you could see when we opened, we were very close to the 0 line at volume inflows, even though we gapped up. We opened in trend higher zone on the tick, which makes total sense because of the gap up, and we also opened in trend higher zone on breadth, which makes sense because the Qs as a whole were gapping up. There were a lot of stocks that were opening up, if not gapped up. So from open though, we could see immediate decline in the tick, immediate decline in ADQD, and vol QD is a slower mover, but it immediately declined as well. So we knew we didn't want to overstay our welcome with the call that we're in. If we bring this to a 1 minute, since we're on the 1 minute, and we can see once again we're up here running into this 4-hour broadening formation. Well, actually that wasn't there, that just was created today. But this weekly broadening formation, the top of the week's expected move. So aligned with these internals, we went ahead and sold. Looked for a little bounce off of the overnight high, which was right here, this blue line. Again, the color codedness you can find in our other videos in the description. But the overnight high, we did take a bounce off of. We tweeted this out. Once we got a lower high, we went ahead and sold. It was just a scalp position, nothing long term. So we took the small profit that we had. Nothing to be ashamed of. Profit is profit, especially when you adding on to the top of the overnight profit that we got from the swing. So we had bought a few scalps. We sold those on the lower high, and we started to position ourselves because of all the resistance that we were hitting here. started to position ourselves for puts if we were rejected by this year flip as well. So again, follow in our tweets, and you'll kind of hear our thought process through the day. Once we got a lower high on, I think it was the 5 minute. I'm not sure exactly what it was. We'd have to look at the time of the tweets, but we did get in puts. We were able to. Oh, we waited for. That's what we did. So we were still above opening print and overnight high, even though we had this lower high, right? So I knew we had the chance of possibly bouncing off of either overnight high again or opening print. So hung in sitting on our hands basically at this point after we sold our calls after the lower high. We sat on our hands and waited for price action or rejection underneath opening print. Once we got this lower high right here, we entered. Actually, I believe we went down to the 1 minute to scalp something. Let's look at the 1 minute. Da, da, da. Yeah, so once this lower high, second rejection, it wasn't a lower high, but a second rejection of this opening print from the bottom side up, we went ahead and entered shorts around here. Again, our tweets are time stamped, so we'd have to go back and look at the exact time, but it was somewhere around here. We took that to the gap close. We closed all of our puts except for one. We left a runner, and we were able to sell with the bounce off of the last week's 50%, which was this dashed purple line, right? So we got basically the whole move. We didn't bottom take it, right? We didn't sell down here. We sold on the higher low right here, right, off of the 50%. Once it breached that candle, once it turned into a 3 essentially, an engulfing candle, we sold and kind of sat on our hands. We didn't want to enter any new calls too early because we were still underneath opening print, so that goes against our rules. I don't really buy calls underneath opening print unless we've got full time frame continuity, or it was just doing a rev strat or something on a 1 hour or 4 hour time frame, and we're coming back through with momentum, and the internals are supporting it. If all the internals are up in trend higher zone or moving toward trend higher zone, you can't even see trend higher zone here on vol QD, but if vol QD was up here more towards trend higher zone, then I'd be more inclined to buy a call underneath opening print. Again, we've already got swings for August 15th and November, and actually we did take the opportunity to roll our November calls. They were up. I'd have to go back and look. I don't remember how much they were up, but they were up. We had 2 November calls that we rolled into a January 2027 call. So like our position there, it gives us excuse me, gives us way more time on the contract, and if we do experience some pullback, the delta is not as high, so the value of the contract won't decline as rapidly as that November contract. So again, very happy with that. If we do go through a pullback, a bigger pullback on like a day or week time frame, then I will add to it. So let's go to the day. If we end up, come on, Thinkorswim, work with me here. So if we end up closing this gap, later, and it gives us the velocity to go down, break this tighter daily broadening formation and go back to the original wide broadening formation, maybe go down here and close this gap. If we do that and bounce, definitely adding to it. Again, we're going to be shorting on the way down, selling calls. Oh, that's the other thing I took the opportunity to do today is sell. Sold another call contract for August 15th for SOXL, taking advantage of some of the shares that we purchased at the April lows around $10. So even if We do get called to the board. With that, we're more than doubling, doubling up. So we got the premium, and we would double up, and more than likely probably just grab the shares again. It'd be no big deal. We would have we have cash in our account to go ahead and buy the shares immediately, or on the day that of expiration, if we see that we're going to get called to the board, and if it doesn't look like momentum to the upside is slowing down at all, go ahead and buy the 100 shares right then and there. That way, when the shares that do get called to the board are sold, we've already replaced them, basically for the same price or possibly even less, depending on where we get them and where it finishes in the day. So yeah, real happy with the day. Made some money to the upside at open, made some money to the downside in the morning. We went ahead and closed these gaps right here, so let's remove that and remove that. We'll go ahead and do that on all of our charts here. Remove that. This is just a long-term chart with some Fibonacci's. This is our swing trade chart, which from zoomed out looks kind of messy, but we're not usually zoomed out this far on it. Oops. Same with the day trade chart that we've got here. We're usually more zoomed in, so it's not as chaotic looking. Actually, that was our scalp chart. This is our day trade chart. Alright, so let's go ahead and also remove the mark for opening print. Our price level 1 in peach is always opening print for the day, but we leave our opening print for the week. This level right here, 26.38, because that's always an important level. If the week flips red, then we're looking at closing this gap, and then we're looking at week and day red, week and below red with only the month and quarter green. Again, it's not really an environment for buying calls for long periods of time, so that's where we could experience the pullback. But again, we're not predicting anything at this point. We're just positioning ourselves to be ready for whichever way price action takes us and capitalize on it, right? So let's go to our scalp chart, remove the opening print from there, and go to our swing chart and remove the opening print from there. Okay, so we already went over what happened today. Let's just zoom back out one more time, look at things from the week perspective, right? We're still inside on the week, still inside. Got close to getting up to the top, but we're still inside on the week. Closed top of the middle third, so we're still basically at the middle of last week's candle. So again, no triggers yet to really tell us which way to go. The longer we stay green, even if we're staying towards the middle of last week's candle, I would say the more bullish leaning I would get. That would just look to me like bullish consolidation, and would be looking next week for the 3-1-2 up. Magnitude being here, the top of the zone once again, hopefully breaking through this broadening formation and testing the weekly broadening again. But again, not trying to predict where we're going to go. So let's go ahead and set our 4-hour markers. That way we can set up our notes. So we'll take the previous high a day, move it up to today's high a day, move the 4-hour trigger to the upside to the high of the second 4-hour of today, move the 4-hour trigger to the downside to the low of the second 4-hour of today. Again, if you're not familiar with the channel, please check out the links in the description to our videos that talk about how we set up our charts to be able to execute with precision on day trades and scalps, because that's what we're doing here, is setting up our day trade and scalp chart to be ready to capitalize off of whichever way price action takes us. Again, today was another display of how we took advantage of price action in both directions, right? We read how the end of the day on Friday went, and applied that to, the end of the day Monday went, and applied that to buying the call or keeping the call to swing overnight, which didn't expect a gap up. Did expect to open up a little bit and then push up, but we got the gap up, so we were able to capitalize on that, capture that profit, capture the profit of closing the gap, and then be able to sit on our hands and just assess where we might go from here. So that's what these notes are helping us do. We'll stick to this method till the day we die, because that's what works for us. So we're going to make some new notes. Let's duplicate yesterday's note and just mark it up. So this will be Wednesday, July 30th. The notes will be from today, July 29th. Tomorrow there will be 105 trading days left in 2025. Our closing price today was 27.03. All right, and we've got our markers for this week. If the week were to flip red, it would do it at 26.38. If the month were to flip red, it would do it at 24.38. If the quarter were to flip red, it would also do it at 24.38. But we want this year to flip green, and it'll do that at 28.13, right? We're just $1.10 away. We can see the week's expected move for this week was $2.41, which leaves us with a range of 28.01 to 23.19. We don't have the expected move for Friday yet. We'll get that Thursday night. We do know we have some gaps above. We have some gaps below. 26. Did we even put that one in there? No, we didn't even. That's 26. Yeah, 26.40. So yeah, this is the gaps below. And then we have our triggers and targets for the 4 hour, the day, the week, the month, the quarter, and the year, right? So since we're not moving to a new year, we can leave these triggers and targets alone for the year. We're still in quarter 3. We don't have to mess with the quarter 3 triggers and targets. We're not out of July just yet, so we don't need to touch these either. And we haven't gone 2 up or 2 down on the week, so we don't need to touch anything on the week triggers and targets either, right? We've got a simple task tonight of just setting our triggers and targets for the 4 hour and the day, which would then roll into our week and month and quarter and so on, right? So let's get our triggers and targets for the downside. The strat, once again, is a major part of how I look at price action in the market. So in terms of the strat, we would be looking at a 3. This first we want to recognize the fact that we had a 1 red 3. That's a classic 2-bar rev strat. A 1 3 shows we had indecision, and then on a small scale, and then we tested out price action in both directions, and it finished bearish. Now, one thing I will point out is it was pretty much a doji, so it's not like we had a big solid red candle right here, showing a whole bunch of momentum. It did flip red, but it was still pretty much undecided. So with another undecided candle on our 4 hour, the second 4 hour today, we'll have a 3 1 2 down if it goes to the downside in the first 4 hour tomorrow. So if it goes below this low, which is 26.98, we'll have a 3 red 3 red 1 2 down. All right, so the magnitude, if price action breaks below the low of this candle, which is 26.98, then the target is the low of the 3, or the magnitude is the low of the 3. So that is 26.50. All right, so the magnitude is 26.50. All right, if I'm switching back and forth too quick, I apologize, but our trigger is 26.98. If we wanted to try and scalp it, we could buy puts as soon as it went to 26.97, knowing that our target will be 26.50. So it's not a lot of magnitude, not something I'm really too interested in from a 4 hour perspective, but this magnitude of the 4 hour on a strat reversal is the trigger for the day. So depending on what the magnitude or target is for the day, it may be something I entertain with the trigger of the 2 down on the 4 hour, because it rolls, if it reaches that magnitude, it then rolls into the trigger for the day strat. So we'll get to that in a minute. Right now we know we've got our magnitude. We want to put in some extended targets out there, probably leave that 25.95 and 25.62 just because we've already had them. We know that those are solid levels. 25.95. Oh, actually, no. We want to switch 25.95 to 26.01. Right, 26.01. I went back and double checked my mark, and it was off slightly. So this is the 78.6 fib of the 2024 run up. So we have that on the swing. Let's try the week chart. Is that too messy? Yeah. So if we look at this and we take this out of here, we can see that this run up from the end of 2023 to the high of 2024, we've drawn out a fib. It's a pretty major move, and this 78.6 is exactly where we're at with price action, right? You can see it was major support here. It's looking like resistance here. We've got to turn that resistance back into support. So if we get back in on our 4-hour chart and go back to our day trade chart, right? So if we get something to the upside, if we get a strat reversal to the upside, this would be a 3-1-2 up. That's triggered if price action goes above the high of this second 4-hour candle from today, which is 27.60. 27.60, and this is a red 3, red 1. Oops, red 3, red 1, 2 up, triggering at 27.60. The magnitude being the high of this 3, which is 28.16. 28.16. So that's a decent magnitude. That's not too bad. Not too bad. That's 48 cents. Never mind. That's not too bad. Wait, 28.16. Yeah, 40. Yeah, it's only 56 cents. So not exactly the best either. Although I will say, with SOXL being this low in price right now, I'm so used to, well, not so used to, but last year was for so long it was above $40-$50 that a couple cents move didn't make a difference. But with it at this low of a price, it does actually make a bit of a difference. If I look at after hours, we are 27.38. I'm looking at my other chart and it's showing 27.20. All right, so either way, we closed at 27.03. 27.20 is only 17 cents, but that's actually 0.63%. So that's almost 0.75%. It's 2/3%. So those 50 cents actually aren't too bad of a magnitude. Again, I guess I'm just more used to these days where we're getting more movement. It's been pretty, intraday movement has been pretty stagnant throughout these days. So I guess I should, if I'm going to scalp something, not be too picky. That is a decent amount of money to get, especially if we load up on contracts. And then we also could look at, the 4-hour runs into the day strat, which would also push us over the year flipping the year green. We would have some resistance here at this daily broadening, this orange line, and last week's high. You see how that kind of coincides with this 4-hour broadening. This 1-hour broadening is here as well. So we may get some poke through and then rejection off it there if we do go to the upside. But that's actually pretty enticing, considering we're in an overall uptrend, even though we are somewhat rangy. The week, the month, and the quarter are green. So right now the market's been more pullback buyers. Even within the range, it's been buying the bottom pretty strong. You can see how long these wicks are. We're just wicking to the bottom of the range, wicking to the bottom. Even when we get down further, we're still just wicking, and that price movement isn't just forcefully pushing down. And then once we did come up off of the bottom, we gapped up. So and we've left that gap even with hitting the top of the range. We'll see if it gets close tomorrow, but if we can push back up, then I'm more inclined to buy calls on a day trade to swing trade perspective than I am puts. Puts I'm still looking at just as scalps mostly. I don't want to overstay my welcome on any puts. So we've got our markers for the trigger and the magnitude for tomorrow. Let's look at some extended targets. The first extended target I would say would be the last week's high, which is 28.50. So 28.50, which would be a dollar move, essentially 90-cent move, essentially, which would be pretty big move for it. I don't really have a tight level on the day trade chart, so I'm gonna go to my scalp chart real quick to see if I've got anything else. I've got this 100%. Oh, this was a fib extension I pulled out on Monday when price action was all stagnant. So I'll keep it out there, 28.68. Yeah, 28.68. I'll use that level. We're just looking for extended targets here, so 28.68. All right, 28.50 is a higher high. So again, the magnitude for a rev strat, which is what this is, a 3-1-2 up, is a rev strat, reversal strat. The magnitude on the 4 hour is going to be the trigger on the day. So let's go ahead and switch to our day chart and get our levels drawn out. It's getting a little bit messy here, so let's go to our swing chart. There we go. And we can see, again, we're towards the top of the week's expected move. Now, by no means does that mean that we're not going to go outside of this. There are plenty of weeks I've charted the week's expected move, and we have just blown through it, to the upside and to the downside, right? So it's just something to keep in mind. It kind of lines up with the year flip, with this weekly broadening formation. It's just something to kind of signal a point of resistance. It doesn't mean we can't break through it, but just we want to be conscious, maybe have our stops a little bit tighter in this range. That way, until it actually makes up a decision of whether we're going to actually push through or trying to push back down again, we're not losing too much profit from the contracts that we're in. So let's look at our triggers. So on the day, this would be a reversal strat, which would be a 2 up, 2 down. So the trigger would be the low of the day, which we already have marked right here, this 26.50, because it was the magnitude of the 4 hour reversal strat. So the magnitude is going to be the low of this candle, which is 26.34. 26.34. And I don't know why this is over here. Oh, I do know why, because that was a big magnitude yesterday. So 26.34 would be our magnitude. We'll go ahead and have extended targets. Again, like we talked about yesterday, we talked about before, even though most all gaps want to get filled, a lot of times there will be a bounce point at the 50% mark of the gap. So this 26.01, I don't know if it's exactly 50%, but it looks pretty close to 50%. So 26.01 would be my first extended target to the downside on the day. And then we want to take into account, you see this yellow line, which is overlapped by this green line, which is part of this fib. Those signal the high of the quarter, that's the yellow line, and the high of last quarter, and the high of last month, that's this green line. So that 25.84, I'll use that as my second extended target. Again, 20 cents essentially. That's over 0.5% of movement for SOXL. So I'm okay having those two targets that close together. 24.83. Let's see, yeah, 24.83 is the lower low on the day. So I don't think we have to really run the risk of making a new lower low on the day. Let's go ahead and look at our strats to the upside. So there's no strat reversal here. It would be a continuation, a 2 up, 2 up. So the high would be the trigger here, 28.16, which we already have because that's the magnitude of the 4 hour strat reversal. Luckily we had a strat reversal, which that gives us a magnitude. Here with the continuation, there's no magnitude, right? So there's nothing to really mark a good target. You just have to pick out other points of, I guess some people call it points of control, points of reversal, things of that nature, when you look left on the chart. So bring this in a little bit so we can see further to the left. And so if we trigger to the upside, my first target will be the high of this candle, because that's been the high of this whole range. So the high of this candle is 28.50. We already got that there. And our next extended target would probably be the high of this candle, which is 29.26. Oops. And our next target would be this 30.55, which is the 61.8 fib of the 2020 low to all-time high. So that's a pretty strong fib, 61.8, and we're approaching it from the bottom side, so it'd be a pretty good assumption that we could have a reversal there. All right, we can see it was a point of contention a lot. Support, well, fell through it, and then was resistance, popped through, it still ended up being resistance, popped through, still ended up being resistance, then finally got through, came back again, was resistance. So we can expect that to be resistance, 30.55. I would very much like to get to 30.55, right? It's because that's an extended target for the 3-2 up on the week. That would put us back. We are back into this strat, so we need to bold that. What is wrong with my keyboard? There we go. 25.84. So we're back into this strat as well. So, we're looking more bullish than bearish if you look at it from a wider perspective. Intraday, it was indecision really on a big scale and small scale, right? That's kind of blown up, but these are the 4 hours. The first 4 hour indecision, couldn't decide if we wanted to be up or down, finished back in the middle. And the second half of the day, it didn't really explore either way, it just consolidated, right? Sunk a little bit into the afternoon. So if we look at how the day finished, it created a 1 hour broadening formation. I'm sorry, not broadening formation, 1 hour downtrend line, right? So we can see from this high off the top of the lower high. So we're below, prices below this. Let's see, 27.39. So prices up around here in after hours. So currently we look like we could be breaking through overnight. We'd have to keep that. There are some economic numbers that are being released in the morning. I think jobs was today, but unemployment or something. There's quite a few numbers that are being released in the morning. As always, there's earnings. Not really any chip earnings, so don't really have to worry about it. Like, if you were in QQQ, you got to worry about tech as a whole. We're concentrated in chips with SOXL, so a little bit easier for us to figure out where we're going when you don't have to worry about as many stocks pulling in different directions based off of earnings and things of that nature. But yeah, we did have that dip into the afternoon. We're holding above last week's 50%, so that's a positive. This is an old 4 hour broad downtrend line that we seem to be staying above. This is a 1 day uptrend line we seem to be staying above, finding support. We're above the 50-day moving average, we're above the 200-day moving average, so things are looking good. I would expect us to have upward movement tomorrow, but again, economic numbers, things of that nature can always change the direction of price action. So with our notes that we have, we're ready for whether we go down or up. We've got triggers, we've got magnitudes, we've got extended targets. We know exactly what we're going to do when price reaches specific levels, with other characteristics in mind, internals, the momentum that we have reaching that level. Are we making lower highs or higher lows, or things of that nature? Got to take that all into play, and using the 4 hour markers that we have set, right? The 4 hour trigger up, the 4 hour trigger down, the previous high a day, previous low a day. We've got all of those marked out so that if we are in here on a 5 minute trying to get an entry, we can see where all of those are. We don't enter calls if we're below opening print. We don't enter puts if we're above opening print, unless, like I said, there's other factors that we have to bring into play: internals, momentum, things of that nature. Are we making higher lows, lower highs? One thing we didn't do is move our overnight highs and lows. So I'll just go ahead and do that now just to get it out of the way. For now, they'll be what they are, but in the morning, things can always be different. So, um, we may need to move these in the morning. Most likely will need to, but in case they stay in this range, we already have them moved, and it's one less thing for us to move in the morning, especially if we're trying to scalp anything towards the open of the market. Don't want to jump in the first minute. We still got time to move these things if we need to move them, but it would give us one less thing to do if we already have these moved. So we'll have these moved. In the meantime, I'll just go ahead and say I hope that everybody enjoyed this episode. I hope you made some money today. I hope you followed along with our tweets throughout the day, and if you're seeing something out here that we're not seeing, let us know in the comments. Make sure to hit the like button if you enjoyed the video. If you're not subscribed, go ahead and subscribe. I'm just trying to build a little community up of traders of SOXL. Again, this isn't the only thing that we trade. We have we've got a full portfolio. That's not the issue. But it's just this channel, I hope, is a way that we can bring a constant, steady flow of income for people at a good price, right? Like we always talk about, for the amount of delta to theta ratio that you get for SOXL contracts, in combination with the low premiums that you have to pay, along with the high beta of the underlying stock, it makes for a very economical but high reward trade, right? Whether you're looking at shares or options. Shares, of course, are going to move a little bit slower than the options as far as the profit that you make in dollars. But if you wait for specific pullbacks, right? Like we entered at $10 earlier in April. Even if you bought shares here at 15, you're still looking at being at $10 a share in profit. So think about other ways that you can make money as well, other than just one leg options. You can always do credit spreads or selling options if you have the shares. So just try to keep those things in mind. All of those are really inexpensive ways to be able to make a good amount of money from SOXL every day. So whether it's just continuing to see your long-term swings grow in unrealized profit before you sell them, or whether you're scalping or day trading, SOXL is something you can make money off of every day. So whether the price action is going up or down. So again, I hope everybody enjoyed this video. Hit that like button. Really would like it if people would subscribe. So do that as well. And I hope you have a great trading day tomorrow.